Hey guys, it's Nick, and in this video I'm going to talk about why cryptocurrencies and Bitcoin is falling again today after yesterday's big fall. Even though it had a bounce back, now it's falling because of this news on tighter reporting requirements that the Treasury wants to impose on cryptocurrencies. So they want to impose the same reporting rules that businesses have for cash. That is, $10,000 or more of a transaction needs to be reported to the IRS. So here's an article here on Zero Hedge, and Treasury just announced a new set of rules about reporting crypto transfers because they claim cryptocurrency already poses a significant detection problem by facilitating illegal activity broadly, including tax evasion. And here they say, if you think the timing is coincidental with yesterday's plunge, we have a bridge in Brooklyn to sell you. Which brings up a good question: is part of yesterday's and the recent plunges in cryptocurrencies because of the insiders in Washington that knew that this rule was going to be coming out and therefore know the effect it was going to have on prices in crypto? That's a good question. So as with cash transactions, businesses that receive crypto assets with a fair market value of more than $10,000 would also be reported on, the Treasury Department said in a report on tax enforcement proposals released Thursday. The Treasury said that comprehensive reporting is necessary to minimize the incentives and opportunity to shift income out of the new information reporting regime. It noted that cryptocurrency is a small share of current business transactions. And so on that news, Bitcoin has dipped now below $40,000. So they claim that wealthy taxpayers as a group are hiding more than half their income outside of wages and salaries. The IRS will be able to deploy this new information to better target enforcement activities, increasing scrutiny of wealthy evaders and decreasing the likelihood that fully compliant taxpayers will be subject to costly audits. And oddly enough, this comes just a week after the Colonial Pipeline ransomware payment paid in Bitcoin, I assume. So they already have a crypto question on tax returns for 2020. At any time during 2020, did you receive, sell, exchange, or otherwise acquire any financial interest in a virtual currency? So they're already trying to turn the screws and control it. So guys, this $10,000 reporting requirement is the same that they do for cash. And if you know how the government operates, this is just the beginning. Okay, so they did the $10,000 reporting requirement for cash. If you ever tried to go to a bank and deposit or withdraw $10,000 in cash, you have to fill out an IRS form stating that you're doing it. And I think the reason why, and it doesn't end there, because when they did that, then people that were money laundering or people that they claimed were money laundering were going to banks and depositing $4,000 and $5,000 and $3,000 at multiple times during the week, let's say, so that at the end of the week, the amount was over $10,000. So to combat that, they then came out with a new rule called structuring. And so it doesn't even have to be over $10,000 anymore if they think you're doing these transactions to evade filing this $10,000, to evade going over this limit. That's a crime also. So expect to see the same kind of thing with cryptocurrencies. They may now be saying, yeah, the limit is only $10,000. But then they're going to say, well, if you're doing $4,000 in Bitcoin and $5,000 in Ethereum and this and that, and it goes over $10,000 in a week or a month or whatever, we still consider that also reportable. I don't know if you know this, but the banks are kind of a police arm for the government. And that's because the government entices them or threatens them to have a certain amount of suspicious activity reports filed on their customer every year. If they don't, then the government comes and says, hey, you're not complying enough, you're not making enough activity reports on suspicious transactions. And so expect that that's going to happen with the cryptocurrency exchanges. They're going to be required to file a certain amount of suspicious activity reports or things like that. So this is just the beginning of them trying to control and track down and put a lid on cryptocurrencies. And it's funny that they're doing this now with the cryptocurrencies, and they've let up on the cash, because before cryptocurrencies came out, there were articles all the time about how cash was the driver of illegal activity, and if we just got rid of cash, everything would be great. So here's an article, 2015, this is why cash should be illegal. On a health level, cash is pretty disgusting. You're swapping of thin pieces of dirty cloth and grubby chunks of metal gripped in hands, stuffed in sweaty pockets, and stuffed up people's noses. Yes, every dollar bill has been stuffed up people's noses, right? So we got to get rid of it. You know, and they brought this argument back during COVID. Oh, every piece of paper has, germs on it. It's going to infect you and stuff. We need to get rid of it. So they did bring that back, but not as much anymore, because I guess they have their sights set on crypto. And here's the usual, trope. Would a cashless society have less crime? Like gasoline in a getaway car, cash fuels all kinds of black market activities. Gasoline also fuels police cars. Intel chips fuel computers that can do great things for businesses or can help hackers hack things, right? Are we going to get rid of computer chips because of that? Scrapping cash would slash gun and crime rates. We are using credit and debit cards and internet banking more and more and using cash less and less, but there's one small group who are still dealing in cash, and lots of it. Criminals. They don't buy drugs and guns with checks or credit cards, they pay cash. Now, the updated article, this is 2010, the updated article is going to say they pay Bitcoin or Ethereum or whatever, evil cryptocurrency they want to demonize. And a lot of countries in Europe already limit how much cash you can use in a transaction. This is from 2011. Italy banned cash payments over 1,000 euros. Now, this former CIA director was paid to write a report to figure out how much illicit crypto use is actually being used. Now, of course, this 33-year veteran of the CIA gives credibility to this report, but it's highly biased because it's commissioned by the newly formed lobbying group, Crypto Council for Innovation, whose founding members include Coinbase, Fidelity Digital Assets, and Square. And he directly refuted this well-traveled narrative. And these are the two conclusions: that the broad generalizations about the use of Bitcoin in illicit finance are significantly overstated. Same with cash, of course. Blockchain analysis is highly effective crime fighting and intelligence gathering tool. And here he has a chart that shows the percentage of illicit activity estimated, and it was as high as 7% back around 2012, and the Silk Road, Darknet, and all that stuff. But now he says it's more like 1%. Like I said, you got to take everything with a grain of salt. You see the source that it's coming from. It's paid for by research that people that are promoting crypto, obviously. But this is the scary part about crypto. If you think that crypto is even more anonymous than cash. If the internet is written in ink, blockchains are written in stone. But that is not all. Perhaps even more interesting to Morel was how analytical firms such as Chain Analysis, CipherTrace, and Elliptic can employ forensic and artificial intelligence tools to find illicit actors and activity on blockchains. In fact, he said he was literally blown away by how they find illicit activity. This is great intelligence work. He also made sure to point out that this analysis works on multiple levels because it can be used to track the actions of known actors, as well as identify previously unknown people of interest. So guys, if you have a bunch of money in crypto and you've been trading it or made big gains on it and think it's anonymous to the IRS or the Treasury or the FBI or CIA, you're delusional. And just how like Palantir software uses people's phone numbers and who they called and who those people called to kind of make people guilty by association, they're going to do the same thing with cryptocurrency by looking at if they have a suspected so-called criminal or tax evader or whatever, they're going to see what other addresses that address has dealt with and how often and who are their connections and all that stuff. So they're going to do a dragnet and make other people kind of guilty by association as well. So that is coming. And like I said in my other video, cryptocurrencies are considered a property just like a stock. So every transaction you make, whether it's buying a Kit Kat or filling up your car with gas, that's a taxable event. So you need to keep track of the money you spent on that gas. What was your basis price for the Bitcoin that you bought and when you sold it to buy the gas? So once the IRS identifies your Bitcoin address as belonging to you, they can go back through the whole blockchain and look at every transaction you made, buys and sells, trades and all of that stuff, and say, hey, by the way, you never reported all these purchases, all these buys of Bitcoin or these sales of Bitcoin, all these things you bought. You owe us a whole bunch of back taxes along with possible criminal penalties for not reporting these things. And so that's the screws they're going to have to turn on people, especially people maybe that they don't like for one reason or another. They can go back in their whole history of cryptocurrency and find out all their so-called sins. So is this news all bad news for crypto? Kind of, yes and no. There's a saying that you only get flack when you're over the target. And so the fact that, maybe they're putting this heat on cryptocurrency to track it and all that stuff gives it an air of legitimacy that they're not going to try to ban it or anything if they're making all these rules for it. So I guess that's kind of a positive. But don't fall into the trap thinking that Bitcoin is going to be the new currency and they're going to get rid of the dollar and everybody who's a original holder of Bitcoin is going to be a billionaire and Bill Gates' money is going to be worthless. That's the same story that people sell with precious metals as well. The dollar is going to go to zero and anybody that stacked silver or gold is going to be the new Bill Gates and all this stuff. That is never going to happen as long as they can help it. They would rather inflate the dollar to zero than let cryptocurrencies or gold or silver take over the monetary system. So they will do anything to keep their power, and that is the US dollar or whatever currency they call it going forward, digital dollar or whatever. It might look just like Bitcoin, but it'll be called US coin or whatever. They're not going to say, oh yeah, let's just hand over our printing money to this Bitcoin thing or to gold or silver that has limits to it. That's not going to happen. So guys, I hope that gives you a little more insight into what's going on with these cryptocurrencies and what is the government's plan for controlling and tracking and extracting taxes from people that have cryptocurrencies. They're not going to be able to hide forever, and the government will find you, whether it's through exchanges or these forensic firms or whatever. They have ways of doing it. I hope you like this video, and I'll see you in the next one. Thanks for watching, guys.